All right, folks. I'm here back with Enrique for the first time in, I think, almost a month, right? Since we've been together on this little live show that we like to do.
I think between the holidays, travel, and illness, it has been a little bit. So
Well, that's part of the Christmas fun, right? You go on Christmas break and you come home sick after visiting
exactly,
all your relatives and having all that
yeah.
holiday fun. The
Well,
market,
well, it's funny too. I'm just going to tell you. I was telling you earlier. I got laryngitis for the first time since I was 16 years old. So I was actually feeling pretty good. I just couldn't talk, which was actually kind of delightful for a couple days.
got to take an official break from chatter. That's
Yeah.
but yeah, the market didn't have a lot of holiday fun. Santa didn't come. Everybody was, me included, like waiting around for that magical week of low volume melt up that we like between Christmas and New Year's. That's always, well, usually always a good time to be trading, and it just never materialized. And the market's been sort of stumbling and bumbling around ever since then. Um, I'm not a I called it kind of character. I react to the markets just like any trader would. But I mean, we've been talking about this for a while, and one of the big things that I talked about back at our year-end meeting was that maybe it's time to start looking or being on the lookout for a bigger pullback in these markets after such a strong performance, an uninterrupted performance, really. I mean, the last time the market pulled back 10% was way back in October of 2023. It almost got there back in August during the
August,
yen
yeah.
panic thing, but didn't make it. We bounced right back. And now we're in a bit of a grind. I mean, even today, which looked like it was going to be some turnaround Tuesday, bad news is good news again action. The averages just aren't clinging to their gains here. We're slipping again, and it feels like we're just in the meat grinder. So, what do you make of all this action that we're seeing in the markets right now?
Well, I think it's very normal and very healthy for a bull market. It's not a real correction unless it's painful. It's the whole idea of a correction. How would I explain this? I think that the markets in a bull market go through periods of over enthusiasm to painful pessimism. And that's actually what builds a bull market. And so you and I were talking that back in July, we got to a period, it was actually after a benign CPI report, that we got very over enthusiastic. I'm pulling up a chart of the RSI on the S&P 500, and the S&P 500 in July got to an RSI. That's a big number, 81.6. And we sort of did the same thing after the election. And so when you get to those levels of overbought, the market's going to correct. And I'll say two things about that. Every time the market's going to correct, the reason is different, but it's always going to correct. So to me, the reason, which now is interest rates, and we'll talk about it in a little bit, you and I were kind of discussing this earlier, it doesn't really matter. We just know it's going to happen. The second is it's not a real correction unless it's painful. Like if it just goes down for 2 days and then it goes right back up, well, it wasn't a correction. This is good for the healthy intermediate term for a bull market. And so, what happens in a bull market? You go through periods of 3 to 6 weeks, maybe 8 weeks of consolidation and correction. And then you go through periods of 10 to 16 weeks of going higher. And so, what you need to do is be patient during these periods, stick to your process. Then, when you get into the bull periods, be sure to take profits and not get overextended
Yeah.
and give yourself powder to be able to lean into this. So, this is all very normal, very healthy. And, we could talk later on. I even will tell you when I think it's no longer going to be a bull market because the market's going to tell us the data's there. And it's
Yeah.
right on the sheet, on the page here. But I think this is just a very normal, healthy correction. But remember, healthy, it's like building muscles, right? If you're not sore, it wasn't working. And I think that's for the health of a bull market. If you don't feel pain in the correction, well, then it's probably not correction enough.
Yeah. I mean, it did feel like everybody was getting way too bullish. And my very overly simplified version of what the hell happened was simply that everybody got a little bit too bullish after Trump won the election and pushed all those gains, all those end of year melt up gains way ahead in November.
Yeah.
And then by the time December rolls around, there's nobody left to buy. Everybody's already bulled up and bought, and it's basically euphoric. And then we have to sit through this grind of, again, like you said, like everybody getting discouraged. And once enough people get discouraged, you'll get like one of those tradable lows will come into the market, and it'll rip higher nicely. It felt like to me yesterday that we had some decent like trapdoor action where you had Bitcoin that retreated pretty heavily in the early morning session, broke 90K actually to the downside. Right here, you can see the lower shadow on this candle right here, and broke below this range, and that scared some people out. And then it moved a little bit higher this morning, a little choppy still in this range here, but stuff like that is kind of encouraging to me in the short term. I don't know if this is necessarily like a big time tradable low for Bitcoin, but at the same time, it's maintaining this range and it shook some people out there. So I find that to be, uh, almost compelling, not to the point where I want to like dive all in on a short-term trade here on something Bitcoin related, but how do you read like little day-to-day action like that and what you do, Enrique?
Well, there's a lot of indicators that are moving in the right direction. If you look at the CNN Fear Greed Index, it's now solidly in fear. If any of y'all just go and Google CNN Fear Greed Index, and you'll see that. If you look at the S&P equal weighted, it's actually up since December 18th. That'll surprise the heck out of folks. Okay.
Yeah. Okay.
And I've seen that in our positions that I can kind of watch the screen and look and see, in how the positions are acting. There's another thing called an oscillator, which is basically a formula that looks at movement in groups of stocks. The oscillators are starting to get too oversold. So, what I said on the Maverick call last week is I felt that we were 2/3 of the way through the downdraft, and now I feel we're 3/4, 4/5, but I don't know, like we could be 60% and we could be 95%. I just am pretty confident we're not 10% of the way through. For various reasons, which we can discuss. And one other thing, look, Santa Claus rally didn't happen. It was down. It also didn't happen in 2023, and the market ripped. Right. We did get the January barometer. The first 5 days of January were positive, not by a whole bunch. Yeah. By the way, I'll tell you something right now. For the month of January, the S&P is down. Yeah, it's down about 0.5%, something like that. So that's really the next barometer that we're going to look at. And I'll tell people what to look for here. This is what's really important. From a big seasonal technical perspective, there are really three barometers. The Santa Claus rally is the least important. The first 5 days is the next. And the most important is, how does January go? A flat to up January is what you're looking for. But I'm going to go to one thing. So people want to ask me. So let's go to, this is going to be the most important thing I probably say in this call. Go back to late 22. And some folks will say, late 21. Some folks will say, well, in 21, off the back of that bull market, December got a little choppy, then January got like really freaky, and then we went into that 22 bull market. But if you looked at the relationship of the S&P to the 50, 100-day, and 200-day moving averages, you had multiple signals. And I don't know if you can pull it up. Can you pull up the multiple moving averages on this chart?
I can do 50, 100, and 200. You want?
Yeah, 50. So let's pull it up, because honestly, this is the most important thing I can say.
There you go.
So go back here, look on that chart, and I'm just going to read it out. So you can see that in March, the 50-day went below the 100-day. Okay, actually in February. Then in March, April, it went below the 200-day. Okay. And then in May, you have the 100-day go below the 200-day. That was your sign, bear market on. Okay. Yep. So my world's real simple. And I've gotten I won't say I got smarter, I got simpler, and I got better as a result. As long as the markets are above their 50, 100, 200-day moving average, and or those moving averages are above each other and generally moving flat to higher, we're in a bull market. So
Yeah.
we're going to play as if we're in a bull market. And that's the right bet to do. And the nice thing is, I don't need to know about inverted yield curves. I don't need to know about GDP or employment reports. I don't need to know about anything. I'm just going to let the market tell me when a bear market starts instead of me trying to tell the market and trying to be a wise guy. So I think that's the nice thing is like, so for right now, we're at that 100-day moving average. Things underneath the sheets are moving nicely. That 200-day 50, like right now, the 50-day, 100-day, 200-day, all look beautiful. So
Yeah.
buy the dip. That's what you do right now. This is a very normal, healthy correction.
Yeah, they're all stacked, like we like to say. And moving averages, again, there's nothing magical about this. We're just smoothing the trend out for those of you who maybe aren't too familiar with them. So we're looking at a situation where the shorter term, the medium term, and the longer term trends are all aligned higher. So, even when you have, and like Enrique said earlier, the market goes from these over exuberant spots where it gets ahead of itself to then falling below, and that's just how markets operate. They're never going to operate in these beautiful straight clean lines right here, but we can use these smoothing techniques and these beautiful straight clean lines to sort of give us an idea of where the bigger trend is and sort of remove some of that day-to-day noise. And that's what's so useful about them right there. It's not 100%. It definitely has to do this if the moving averages do this and that. They're not necessarily like super big, I would say, short-term trading signals. They're just really good directionally to like get you tuned into, hey, this is what the market's actually doing, and the other stuff, that's just junk for now. So that's an excellent point. That really kind of grounds us to where we are right now. So what kind of opportunities should I look for in a market like this, Enrique? I know you like to yeah, find these momentum resets in these bigger uptrends. How can I go about doing that, even if I don't have some sort of fancy system to deal with?
Well, look, I actually think there's kind of there've been three themes that I've focused on here in the recent months. And it's actually interesting because we've talked about some of these. The first of these was what I called the Trump tsunami, which
Mhm.
is when Trump came in, there were a bunch of names that just got overwhelmed, and let's pull up because it was a free idea we gave on this call. Let's pull up Booz Allen Hamilton, BAH. Okay. So BAH, this company is like 100% government, federal government. And to take the chart back a little bit further so you can see what a great stock this has been. They basically are outsourced intelligence agency. Okay. So the stock was at an all-time high, just crushing it. And literally the day that Doge is announced, it gets crushed. It gets destroyed. It trades from 185 to 140 on its way down to 130. But the funny thing about this company is if you think there's going to be more domestic violence and more global crap, terrorism, like these guys are going to be, we need more of this, not less of this. So what I've noticed, and look at this chart, by the way, the Trump tsunami trades, this and the other ones, have now started to act better. They're going up when the market's going down. Okay. And so that's one of the first signs. So, often with my style, so there's an old saying that being early is being wrong. Not necessarily, right? So it depends. It depends how early you are and how wrong you are.
Sure.
With most of what I do, we often will get in, and I'd say the majority of the time we lose a little bit of money in the first 15 to 30 days, a little bit, less than 10%. But I do that, even though it's the majority of the time, because the minority of the time where we make money quick, we make a lot of money. Like it's just so it's worth it. And we make money further out. So this trade has been in here for about 30 days, 40 days, and it's starting to work. So that's number one. So I think any of the Trump tsunami trades, the federal contractors, some of the healthcare stuff, I think all that's very interesting. Two other quick trades for you to look for. A lot of stuff sold off on interest rates beginning in December 9th. So can you pull up the chart of the 10-year?
Yes, I think so.
Okay. So look, and actually, I'm gonna give potentially a free idea here in a second. But look at the 10-year. When the Fed cut in September, it went nothing but up. But the market didn't really care. The market hit new highs. But go pull on your chart to December 9th. It's those three little green guys. Like you'll see it there. See that big green? Go to your left. The next one. Yeah,
This right here?
December 9th.
Okay.
Okay. From that point, when rates started going up, everything that has any impression of being interest rate centric has been hammered.
Yes.
Okay. Insurance companies, home builders, etc. But I'm going to tell you something. We just saw rates go from 4.2 to 4.8. Who gives a S? Like, it doesn't matter. It's not going to change the world. The problem that these stocks had, just like the market, is they were all at all-time and 52-week highs and super overbought when we were going into whatchamacallit, the November, December. And the last theme, so I'm giving a lot of ideas here. I'm covering a lot of ground, but I'm going to give you an idea. So pull up KIE, because this actually is a poster boy for what's going on here. Go out a little bit, and you've got the RSI chart there.
Mm-hmm.
Okay, so KIE, this is the S&P insurance spider. It's got 52 companies. They're weighted between 1.2 and 2.2%. So it's equally, and it's got everything. It's got Aon, AIG. It has everything except health insurance. So it's got property, it's got casualty, it's got life, it's got, you name it. This is the insurance industry in the United States. Okay. And you can see, go on the chart to December 9th. We talked about that date before.
Zoom into December 9th. That would be up
here. See right what
here.
Happened on December 9th?
There it is.
Okay. And then look what happened 4 days ago. Go to 4 days ago. You can see it right there. Okay. Yeah. So what's happened here? Well, people are extrapolating higher rates as being bad for insurance, which is not necessarily true. It's complicated. Different insurers, you don't know their book, etc. But they sold this off of a 52-week, off of an all-time high, by the way. And then the fires are then caused the index to get even further sold. Which, and the fires are terrible. There's nothing good out of the fires. I can't, but yeah. Let's say it's $100 billion. Right. That needs to be covered. Let's say 50 of that isn't going to be covered. The insurance companies are going to take it. That's 50 billion on $1 trillion industry. So, yeah. What we're seeing over and over, and this especially picks up in corrections, is we're seeing these opportunities set themselves up. And part of this exists because go back into December. And this thing, I'm looking at a long-term chart. This thing was at an all-time high back in November 27th. Yep. All-time high ever for this. And so when you're coming off all-time highs, you get RSI buy signals like this, and you have a fundamental backdrop that you say, well, rates are up, but they're not up that much, and the fire is just California. You buy things like this. And yeah. I think this stock's good for a 10% bounce, super high probability. This is what you want to do in a correction like this.
Yeah, and also, since it's an ETF, you get a little bit of that insurance against, well, it's an insurance stock, but insurance against earnings coming up. You don't have to worry about like one earnings knocking it apart.
it ain't going bankrupt. I know that.
Yeah.
They're not going to have an earnings warning. It ain't going bankrupt. So it's kind of a nice way to trade it. But this is an opportunity. Warren Buffett: be greedy when others are be fearful when others are greedy, and be greedy when others are fearful. I always say I only make money when I kind of hate investing and trading.
Yeah, no,
I make all my money when I'm like miserable, and then as soon as I'm really happy, I'm like, oh, I need to be selling. Because I'm gonna get punched in the face soon.
It's funny you say that, because all of the young kids online in the stock twits and the chats, they say you took a screenshot when you should have been selling. They got a little too excited about the gains and took a screenshot of it to share with their friends. But that was the exuberance. That was when they should have been taking some money off the table.
But there's a lesson here also in life, is that I'll tell you one thing I've learned in life, and sorry, I don't want to get too philosophical here.
Oh, good.
I find that in my personal life and everything else, I take whatever is bothering me the most and stressing me out the most, and I dive into it first and dive into it the most. Yeah. And that gets huge results. So when you're losing money, you need to dive in and be more involved, not less involved. You can't ostrich, although I guess technically I read ostriches don't put their heads in the sand, whatever. But anyways, you can't turtle. You need to go in there. And look, this is, like I said, this is a target-rich environment. You will not see. So even if we start a bear market, we'll do one last thing. Go back to S&P 22, early 22. So let's say we're about to start a bear market. First off, I'm telling you, the bear market's not on until those moving averages are lower. But take a look at the bounces that we got there. Okay. Yeah. Look at that first bounce. What was that bounce? I think it was 8%. The one before that. Look at the bounce before that. Yeah. I think that was like a 6, 7, 8% bounce. Look at the next one. Okay. Yeah, and what's amazing, and look at what's amazing about that next bounce. This is where I'm telling you, you can actually time this. Don't believe what they tell you. Okay. You're fed a line of BS by like CNBC and all this. This bounce here was how much? 11%. Yeah. And look what happened. It happened right as the 50, 100-day are going below. So this is right as the 50, sorry. So the 50-day is already below, and the 100-day would go below just a couple weeks, like a couple weeks later. You knew it was time to sell. So here's the point about counterpunching, even if we're in a bear market. And this is what gives me confidence trading, buying things that were down in a bull market, is even if I'm wrong, I'm going to know what I'm wrong because the market's going to tell me with the moving averages, and I'm also going to have a chance to make profits, to counterpunch. So the best single day performances in the history of the stock market have all occurred in bear markets. Okay, yeah. But I don't think we're anywhere close to a bear market. But look, let me be very real here. I bet you almost no one has made any money in the last 6 weeks. Okay, it's just the math. You probably made a couple trades here and there, etc. Yeah. But there's a process here. And in a bull market, not making money is a good thing because it sets you up to make more money. You want to lean into it, not lean out of it. So as long as we are in a bull market, which stable-ish interest rates, stable-ish inflation, above the 50, 100 to 200-day moving average, we're bull market. I'm as excited as I've been about stocks, probably since we started talking. I mean, we started talking back in August. I was super excited then. This is awesome. This is 10 times better than after the election, in my opinion.
Yeah. Yeah, absolutely. I hear you. And, like you were saying, these rips were massive in 2021, not just these two, which don't look like much just because we were in such a big drawdown there. But I mean, if you look at this, we were up almost 20% coming back there to the scene of the crime, which is what the market likes to do. It likes to rip back there toward those areas that used to be support that turn into resistance and then roll over. So
exactly.
You don't have to time these perfectly, like Enrique is saying right here. You don't have to time this exact bottom and time this exact top. This is such a big rip that you can grab little bits in the middle there, and you're doing great.
Well, and that's the point. So, I'm usually a little early to buy with this strategy, and I'm a little early to sell, and I'm a much happier person because of it. Yeah. Because early to buy and it works, and early to sell, and but you made money is a lot better than late to sell and you lost all your money. So it's like I kind of work backwards from did I make money and did I make a good return, and then I never even think about it. I was talking to a friend the other day, and she was talking about like stocks that she'd sold and all that stuff, and I don't even know what I sold. What I did 3 months ago, I have no idea because it's not relevant to me now. Right. I'm focused on the team we've got out on the ice and how do we make money here. So
the gains are booked and you're moving on to the next hit. Exactly.
Yeah.
So you mentioned this briefly. We do have a little earnings season situation coming up right here. They start probably, I would say, in earnest early next week is when we're really going to start to see the earnings begin to roll in. I don't want to talk out of school, but you mentioned to me that you could possibly see some opportunity during earnings season for this market to kind of turn around as long as earnings aren't terrible, as long as they don't scare anybody. What are you looking at anything specific for earnings season coming up, or any specific group, or just in general?
There's a couple things. I mean, I'll share a couple things with you. Like, look, if we go into earnings season with the S&P with an RSI of 80, I don't really care what the companies report. Stocks are probably going to go down.
Yeah.
Good reports are going to disappoint. And if we go into the earnings season with, stocks sold off, I kind of don't care what they report. Stocks are probably going to go up. And I think we're setting up to that. So we've got, we got a couple things. The market's consolidated nicely. It's been consolidating for 6 weeks or 2 months, actually. I mean, you could go back. I mean, technically, I can go back to, I did this yesterday, October 14th, exactly 3 months is where we are in the S&P 500. It's the same exact spot.
Yep.
Number two, I think it's really interesting that the Trump inauguration will be next week. That could be kind of worked through. Number three, and I saw this data here, Q4 earnings growth for the S&P 500 is expected to be 11%. That's actually the highest that's the highest quarterly earnings growth in the S&P 500 since 2021. Okay, so earnings are accelerating. Now, why is that happening? Well, because we're getting easy comps on energy and financials, and then the other stuff that was growing is still growing. So, but I don't care whether it's easy comps. And that's the other thing when people are looking at earnings growth. They don't, I think it's easy to just get caught in absolutes, but year over year growth has a lot to do with what happened the year before. So this was back when Whitney and I were running Empire. I came in and said 2021 is going to be the best economy and best earnings growth year we will see in our lifetimes. I guarantee it. I was like, I absolutely guarantee it. And at the time, I was like, well, I had a bunch of stuff that was closed. Now it's going to be open. So by definition, it's going to do much better. I think you're seeing a lot of that. So look, I think that companies will meet-ish their numbers as they have been for the last 4 quarters. The market's been consolidating for 4 months. One thing, and I don't know if you can do this. Can you pull up the an RSI on the 10-year yield? And I'm going to block
let's see if it does it populate for it. Yeah.
Yeah. Okay. There you go. Yeah. So just so you guys know, like I think most of you know this, but with bonds, the higher the yield, the lower the price in the bond. When we talk about bonds, we usually look at the yield, though, because in theory, which is true, it's just a matter of degree, higher rates should slow the economy, et cetera. So, but look at that RSI. Look at the last time rates got this overbought. What happened?
Straight down.
Straight down. Now, if you were to superimpose the S&P 500, when was the last time the S&P 500 sold off 10%? You said it at the start of the call. October of 2023. Yep. Mm-hmm. Exactly. And if you go back even further into 2022, so, look, we're in these natural cycles. And so why, let's, you could go back and see it back there, but let's go back to the rates recently.
Okay.
Okay. So why did the bond? So the Fed cuts rates, okay, 50 basis points, and the bond yields go through the roof. Why is that? Is that because it's the bond vigilantes? Is it because of economic growth? Maybe, I don't know. But what I will tell you is look at the yield and the RSI on the yield. It had a RSI of 26 and 30. It was going to bounce, just like any asset bounces. There were too many people on one side of the raft. And so, tune out the noise. Bull market, earnings good, find great companies that have gotten materially oversold, buy them, find companies that are poised to break out, position size correctly. So, yeah, I think we're setting up this. If you look at the RSI on this too, I mean, I got to tell you, I do not think the next move on this chart is 5.5. I think it's 4.5.
Yeah.
And I say that with a high degree of confidence.
Yeah, that makes sense. I mean, yeah, very factually driven there. Speaking of going back to earnings coming up, I really like how, and I mean, maybe it's a little counterintuitive, but I like how a lot of the Mag 7 names have been pulling back pretty hard, because it feels like every time this market has weakened a little bit, everyone rushes and hides in the mega caps, and now they're finally starting to roll over a little bit. It kind of gives me a little more confidence that that we're like you said, that we're getting to the point where we're 2/3 through this thing. Because when you see a chart like what we're seeing on Apple right here, which obviously got way overbought right here, but it's just been going straight down back here down to the scene of the crime. It's nice to see that some of the air is coming out of these stocks. I don't know if you have any of the mags that you're looking at right now, or any chart that you prefer of these, but I've been keeping a close eye on them.
Someone asked me about Apple the other day, and I think that look, I know all the bear cases on Apple. I thought it was nuts when it went up to what was it, 260. And
Yeah, that was a crazy
look,
move.
it had RSI of 80,
Yeah,
with earnings growth of 3% or whatever. I was like, okay, I don't get this. I'm not going to touch it.
right.
I think Apple's fine is the answer.
Sure.
I think that all of these are going to have really good earnings growth, except for Tesla, which is a coin flip. And I think that it'll be, generally a positive catalyst for the market. But look, are the charts all that different than the chart of the S&P 500? I mean, they're up more, but they're kind of, it's the tail and the dog.
Yeah.
So I think they've all consolidated, and I think you'll get solid earnings out of them. And what I'm excited about the Mag 7, everything except, so Tesla's its own thing over here. Everything except NVIDIA, I'm super excited because especially all the hyperscalers, Meta, Google, Microsoft, and Amazon.
Yeah.
At some point, I think they're going to begin spending less on NVIDIA chips, and whether I don't even almost care whether the revenue is growing, because right now they're taking the full hit on the capital expense and they don't have any revenue against it. So if they just bring the capital expense down by 20%, which is very bad for NVIDIA, their earnings could go through the roof. This is what happened to Meta when they toned down the metaverse spending, which, by the way, all that metaverse spending is exactly why Meta's in such a great position with AI, because they spent all that silly money back in 21, 22.
And everybody hated it when they did it too. Everybody got really mad and pulled off the stock.
I don't want to give them too much credit, because I don't know that that Zuckerberg was like, oh my gosh, well, if it's not going to be the metaverse, it'll be AI. I think he was just like, well, we want to do metaverse, we need to build all this stuff to do it. And then all of a sudden metaverse kind of like flamed out, but then AI came and it's like, it's the same stuff. Great. Let's roll.
It's just branding at that point. Yeah. But it feels like it always feels like Zuckerberg wants to get away from like, oh, it's just Facebook and it's just like your aunt posting, stuff about going to church and it's where old people hang out. I think he tries to get away from that by saying, no, but we're doing all this other stuff here and we're developing.
So I'm going to push back on you though, because it's Instagram and WhatsApp. I mean, WhatsApp's the sleeping giant, dudes. WhatsApp has like 4 billion people. Like, I want that to sink in. How many subscribers does WhatsApp? And we can go through some stocks here in a second. I know we've been doing it. Okay, 2.9 billion active users.
Yeah, it's huge overseas. It's not crazy. Big in the US, right?
More and more people are using. I use it all the time now. So
okay,
yeah,
that's interesting. And like you mentioned, Tesla. I mean, Tesla's always the wild card, but it's looks very interesting here coming into. If I can pull it up, I'm frozen for some reason here. There we go. It's in an interesting spot here coming into earnings. I mean, I would never jump in front of a Tesla earnings call just because you never know what you're going to get with these guys.
Well, but I mean, the thing is like I'm just pulling up the earnings on Tesla. Of the last 1, 2, 3, 4, 5, 6, 7 quarters, they've missed 5 of the 7 quarters.
Yeah,
and they've had negative earnings revisions for that entire period. The only quarter they beat last quarter and saw a positive earnings revision. But I'll tell you, earnings revisions just turned negative again, ever so slightly. So it's just like a body in motion stays in motion until I have enough proof that it doesn't, and one point does not make a line. So I wouldn't with Tesla, super extended from its 50 and 100-day moving averages. I wouldn't be surprised to see Tesla down 20-30% on earnings.
Oh yeah, absolutely.
So I think it's definitely not like something I would I'd step into. That's the only one that gives me pause, to be honest, of the Mag 7. But so let's actually do this. Let's talk about quantum. Okay, everyone wants to talk about quantum because I think a lot of people were involved in these stocks. I pull up any of the stocks; they're all the same stock to me.
Let's go with IONQ. Is that a good one? Or you want to go?
IONQ is fine. No,
RGTI. There we go.
All the same. RGTI is fun. RGTI is a good one. Okay, so I said this in the chat. If you have, and I'm looking up data here as I'm talking to you. If you have a smallish cap stock, Rigetti's got a $2 billion market cap that has no revenue or earnings. Rigetti has revenue of $12 million, by the way, going down for the last 2 years, not up, and has EBITDA of negative $65 million. And said stock goes from let's see here, goes from
90 cents.
two to 20,
Yeah.
you should take some profits.
Yep.
And then remember the rule of momentum stocks. Okay. Momentum stocks are stocks. You can make a ton of money in momentum stocks, but momentum stocks go up because they're going up. And then they go down because they're going down. I know that sounds stupid. You're going to be like, yeah, dude, thanks for that. But here's what happens. Someone buys it, say going from 2 to 5 to 10. They go, I'm going to buy it. It's going to go higher. Then it goes to 15. And the more buyers come in because it just went from 10 to 15. But then the whole thing reverses. It happens over and over. I don't care that it's quantum computing. It could be metaverse. It could be NFTs. It could be some crypto thing. It's all the same thing. And so now what I'm going to tell you, here's my certainty. That 100-day moving average is at $3.70, 50% lower than where we are right now. This will trade at that 100-day moving average, which will sit at best between $4 and $5 sometime in the next 8 weeks.
Yeah.
Okay.
Yeah.
That's like certain. You want guarantees? There's no guarantees, but that's a high probability bet. So does that mean that you can't trade? KIE, Scott Morgan is the insurance ticker, Killer Indigo Energy. So does that mean you can't trade these? No. But what you want to do is you want to get in before the move, not during or after the move. Okay. And I think that's what you do really well, Greg, is you identify names that are setting up for this. As opposed to all my whatchamacallit was blowing up. Everyone last week was talking about quantum. Yeah. And the funny thing is, people, as you guys get to know me, I'm the same thing over and over. Maybe I get boring, but it's training, it's process. Like what's happening to quantum, I've seen happen 100, maybe 300 times in 30 years. So just be very, very careful. And why would I buy one of these quantum things when I can buy Booz Allen Hamilton? Today? Super high quality company, got knocked down a ton. The more chaos, the better it does. This has got 12 million of revenue going the wrong way and losing 60 million bucks. No, thank you.
Well, it goes back to, we can simplify this. And I love how you said that it doesn't matter what the company is, because it doesn't. I've seen this chart a billion times. Everybody's seen this chart before. And when you have a parabolic move, which this clearly was, when something hockey sticks on you, it's not going to correct sideways. It's not going to sit at $18 and chop along. Like, remember last year when Bitcoin made that big rally and then it chopped along for a while? This is not going to do that. This is going to give it back. And you see this, and it doesn't matter if it's quantum, it doesn't matter if it's pot stock or whatever that the trend du jour happens to be. They're all going to do the exact same thing here. It's just a matter of when. And so when I look to trade these things, like you were talking about, Enrique, once it starts going up and gets up here into this mess, it's not something I'm going to try to buy. Sure, like you can use hindsight and say like, oh, well, if you bought it at 5, you could have ridden it to 18.
Yeah.
But you don't know when this thing's going to run out of gas, because when it does, it's going to be sitting up here one day like it was on the 7th, and then you're going to wake up the next morning and it's down 50%.
But what I love that you do is your style, which is very different than mine. You buy this thing on that breakout at 250.
Yeah.
Because pull the chart back, because you'll see it well. When you pull the chart back, you get rid of the new data. Can you do that? I don't know if your charts do that. Yeah, there we go. Yeah, there we go. Go a little bit further. Let's get that breakout. No, come towards the future. Yeah, okay, go.
It's so big.
There we go. Yeah, there we go. That's what you buy.
Yeah,
right. And I think this is what you did. I didn't follow the trade closely with IonQ, but that's where you want to buy it. So, right. I see a couple of questions. He gets to drive here, so I can look at the questions.
No, go ahead. Yeah, absolutely.
Someone's asking about windfall profit from the reconstruction of LA fires. I think that's a really hard way to make money. I don't think there's a lot of direct plays, but what I would look at is things that have gotten crushed because of the fires. KIE is a perfect example that it definitely got hit because of this. There's a couple insurers that are out there. I'll actually just throw one. I'm not saying to buy this stock at all, but I'm just telling you where to look. Take a look at Mercury General, MCY. I don't know whether to buy Mercury General or not. I haven't made up my mind. It's a huge California insurer. Look at that. So the stock goes from an all-time high of 80 on October 29th, and it hit 46 today.
The RSI is under 10.
Well, and I'm going to tell you, though, and this is, you got to do some work here, and we're going to do the work. We'll come up with opinion. If you look at this, you kind of want to wait for it just to recover. Yeah, because let the market tell you what's going to happen to it. So I think that's something to look at. One other thing, so another topic here that you talked a little about, people talk about the dollar. The dollar is a very big topic right now. But I take a look at it the other way and go look at the dollar and the whatchamacallit, the 10-year. It's the same chart.
Yeah.
It's the same chart. There's no difference. And that makes sense, right? Because if our rates are going higher and everyone else's rates are staying low, then people are going to buy more dollars. But to me, the same analysis that I gave on the 10-year exists on the dollar. Which is, I'll say a couple things. A DXY at 104 versus, I don't know if you can pull up the DXY.
Yeah,
it's the dollar index. A DXY, okay, so look, most of the year, the DXY was at 105. That's the average for 2024. Today, it's at 109. Who cares? Who cares? It's 2%, 3%. It doesn't really matter. I care if it was at 90 and it goes to 110. That I care about. But then, this is another, just if you pull up the RSI, it's just oversold. So you just got to be patient. I think that's the key here, is that you don't make money. Let me put it this way. Making money quick is sexy, but hard to do, not sustainable, and always leads to pain. Making money with a process that takes weeks and months, and then years, is a very sustainable, repeatable process that may be uncomfortable at first, but ultimately pays off a lot better. That's been my experience.
Yeah, absolutely. And I'll follow that up with a little anecdote. As a shorter term trader with a shorter time frame than you, when I first really hunkered down and tried to do that, which is it's hard to do. You get tricked into thinking that you can consistently make the same money every single month, and one of the traps I think a lot of new traders fall into is they say, I want to be able to make this kind of money every month and make it sustainable. Whereas you have to learn, and most people learn the hard way, that the market doesn't allow you to do that. It's going to come in fits and bursts, and you're going to make money over the long term because you stick to the system and you can ride out periods like this, and then you know when to put your foot back on the gas and lean into a more favorable market and things like that. So I think that's something that people need to kind of learn how to wrap their minds around.
There are different types of strategies. Obviously, there's selling income strategies that are a little bit more income oriented, but pretty much every other trading strategy, to me, you just said something so powerful, and I hadn't really thought about it. We're so accustomed to in our lives, income. I have a job; it pays me X a month. I own a property; it pays me Y a month. The markets aren't like that. That's not how this works. And so, I think that the way the markets really work is you're going to lose money now, and then all of a sudden you're going to crush it for 2-3 months, and then you're going to lose money for 6 weeks. And then you're going to crush it for 2-3 months, and then you're going to lose money for 6 weeks. That's how it really works. Yeah. It sets up to make the money, and so you have to have a different mentality. It's easy to get frustrated. It's easy to get depressed. And especially look, if you enter into and you're new at this game, and you enter into one of these corrective periods, it feels terrible. You think it's never going to work. I'm telling you, I've done it for 30 years. I did it on billions of dollars. It works. You're just patient. And that's why I said, the other thing to do here too, and we all love stimulus, right? We love our brains exploding with what's going on. And the stock market's a little bit like gambling. But if you're losing money, this is my best advice. If you're losing money, go in, and the first thing you do every morning that you're losing money, you go into every position, you go, okay, what was my thesis? Why am I here? Why am I doing this? Do I still believe that's true? Okay. And come up to an answer, yes or no. And then if you're losing money, turn your screen off and go for a walk and don't pay any attention. Best advice I have. I almost think pay more attention on the day-to-day when you're making money, because that's when you need to figure out when to take some profits.
Yeah, absolutely. You got to micromanage in there, right?
But in trading is chunky. Trading is chunky. I mean, there are a few strategies that aren't, but for the most part, it's not, it's keeping your losses. It's keeping your losses lower during the investment periods and then harvesting them off those investment periods.
Yeah, absolutely. And and one of the things I do to mitigate those tough periods is when I recognize I'm not in the best type of market mode for the trades that I pick, I trade less. and I trade more when the market's more favorable. And so if as long as you're not consistently trying to do the same thing all the time when the market's changing, you're going to be okay.
So, I think that your strategy and my strategy work very well. Yours is for making money as the market hits new highs. Mine is for setting up as the market turns in the context of the bull market. It all comes back to, are we still in a bull market? If we don't think we are, well, we're going to change our strategies, but right now, nothing's changed.
Yeah, I mean, it's funny you mentioned that because we've been talking a lot since way back in the spring, and every time we get corrective action like this and the market gets in this spot, I'm like, man, Enrique is ready to feast on some of this stuff because I'm always thinking about what you're up to, because you've mentioned it the opposite when you've been like, oh, this must be a great market view because I feel like I got nothing going on at the moment. So it's like we have these.
And you're crushing it. Like you're when you're posting all these like 400% short-term option wins. I'm like, I can't find anything to buy, dude. Like I can't. Like I'm like bored. But look, I want to say one other thing too. It's very heartfelt. Like it's been a tough 6 weeks. It's been a tough 6 weeks for the market. It's been tough 6 weeks for everyone. This is investing can change your life. It changed my life. Poor Hispanic kid from Phoenix, grew up like homeless for a bit. All that stuff. I've transformed everything because of trading and the markets and process. But it is a process. It's like anything. You can't, if you get up on January 1st and you say, oh, I'm going to lose 30 pounds and you go and like lift weights super hard, you're going to injure yourself. It's like you got to be systematic about it. You got to be process oriented and patient. And it pays off. I mean, there's a ton of people on these calls that have been with you for years, that have consistently made money. There's a ton of people that I have that were with me at Empire before for a half a decade. And, it works through time. So people should be getting excited now.
Yeah, absolutely. I mean, the market is going to be full of opportunity too. I mean, after this reset, and like we were talking about earlier, I know there's a lot of fear, or there's a lot more fear. I think we just have that recency bias where things were just quote unquote easy around the election season when everything was just going up and you could throw a dart and bang, you would get a good winner. I mean, you didn't really have to know anything or do anything or have any type of system. You could grab a trade that would go up. And then when things stop doing that, people get a little despondent and they start thinking very bearish thoughts and like, it's over, this bull market's done. And you start hearing chatter like that and people start feeling that way. When in reality, like we were talking about earlier, this market is by no means broken. We're just in a more corrective phase of a bull market right now. I'm not saying it can't break; it very well could, but we'll cross that bridge when we get to it. But for right now, we need to be treating this as a run-of-the-mill pullback, which it absolutely is. I mean, we're less than 5% from all-time highs here, and we're already starting to see, like Enrique said, like the CNN fear and greed index going to fear, which I think is batshit at this point, but that's how people think. You know what I mean? That's where people's minds go. They get extremely bullish, and the more bullish they are, the quicker they're going to flip to bearish when things start going south.
It's human nature. We're literally programmed. I talk about this all the time. We value negative feedback at a ratio of 8 times to 1 physically. Like when you lose money, you have a physical reaction. It's like an anxiety attack. Anxiety attacks are real. When you have them, your body is actually, the chemicals are flowing through and freaking you out. Same thing happens when you lose money. And that's where I say, take a piece of paper out, write down each idea, put down the 3 reasons why you're in it. Ask yourself, are those 3 reasons still true today? If they're not, get out. If they are, stick with it.
Yeah. Yeah. I mean, we're going to have a lot of opportunity coming up, whether you're looking at the things I trade. Enrique has some immediate opportunities coming up. But I don't see a lot of tickers in the chat right now. If anybody has a ticker they want to toss in before we wrap things up, let us know. Patrick just asked if we have any tickers to monitor for inauguration next week. I don't know if I have any inauguration specific trades necessarily. We have earnings and all that good stuff to get into, which should open up some opportunities. But I don't have anything specific to the inauguration. Do you, Enrique?
No, look, I think a lot of these things that we talked about, like, Booz Allen Hamilton, KIE, a lot of these things that have gotten beaten down, I think are very attractive. I'll say here, Patrick Cross actually had a really interesting idea with Mercury that, and again, these are not formal recommendations. The implied volatility is through the roof. Selling puts on that is terribly interesting. Because if it doesn't go bankrupt, you're going to make a ton of income off super high implied volatility. So I think that's a great idea. Yeah, I would lean in. Well, okay, so actually here, Jeremiah, let's talk about energy. That was actually one thing I wanted to talk about.
Sure.
Look, I think energy is very interesting. We've made a lot. I've done a lot in the energy area through the years. Our thesis on energy has been very simple for the last 4 or 5 years, is that we are at a base equilibrium between 65 and 95, and that there's enough supply, there's enough demand, none of it's getting out of whack to one way or the other. But when it gets down to the lower end of the range, we like to buy it. And the thing that I love about energy, which is happening here a little bit, well, I mean, I'll tell you a couple things. Oil ain't going bankrupt. That's something else we talked about. But, when you're long energy, you're long chaos. So, what happens if Iran does lob a nuke, or Russia lobs a nuke or something? Oil's going to go to 90 that day. And so, I feel like energy is something that if you buy it right, okay, and that's the key, buying it at a good price. And I'll throw an idea in here. It's a spicy one, okay?
All right.
Oil U, I've talked about it before. It's
Yeah.
the triple leveraged energy. Okay. I actually talked about this one back right around these levels a couple months ago.
Yeah.
I love this idea because, if the economy's good, then oil prices are gonna be decent. Okay. If we get terrorism in the Middle East, Russia, oil prices are gonna go higher. The only way we lose if we're in a recession. But I thought our problem was too hot, not too cold. So this is triple leveraged. I think that you need one sneeze out of somewhere, and this is going to be a $40-$45 stock. From here, there's no options on this because it's a triple leveraged ETF. But I like the energy stuff a lot.
Yeah, no, I like that idea. That's great. And just looking at the recovery, from that extreme move that we got when everything was falling apart in oil back in December. I mean, you can see the extreme oversold reading right there, and then the V bounce that this thing has posted. I love the idea of it being like a chaos option.
It's a nice hedge in your portfolio, right? So it's like it's kind of, to me, it's great because we're in a bull market and everything's great. These will eventually go higher. But if there's a freak out, like your other stuff's going to go. By the way, I'll tell you something. Booz Allen Hamilton, which we're talking about here, you get a terrorist act, that stock goes up 20% the next day.
Yeah, it goes up with the Raytheons
but it's even better because they're not paying they're not paying $1,800 for a wrench. They're spies.
Yeah,
which I would imagine the spy business is a high margin. I don't know. I've never.
I would think so. Yeah, I don't know.
So we got Jerry Swinford on here. Do either of you think there's much of the overwhelming alerts by several services that an unavoidable crash is coming soon? I think they're trying to scare you to get your money is what I think is happening. Crashes do happen. Crashes will happen. In my lifetime in 30 years, I've been through 2 of them. So that's one about every 10 years. I mean, I guess when I look at the calendar, we'll probably do, but we're going to know. Crashes don't happen overnight. The global financial crisis didn't happen overnight. The internet bubble didn't happen overnight. Even 87, which did happen overnight, you made huge money out of that. So stick to the process. Let the stocks tell you what's going on. Let the stock market tell you what's going on. Don't you try to tell what the stock market is going on.
Yeah, that's a great point there to wrap up where, in hindsight, crashes always are presented as this out of the blue, the market was at all-time highs. Then all of a sudden the next day it was down 50%. When in reality, the market does start rolling over and give you some signals that things are going poorly before it crashes. So we more than likely will get some sort of leading indicator showing us that something's not right, and we should be more aware that something bad could happen in the markets. Maybe not necessarily a crash, but some sort of new downtrend.
Well,
and like the technician's old saying, the market never crashes from its highs. I wouldn't say never, but most of the time it won't.
Well, but I'm going to go to something direct here too. I love Jim Rickard's work. I read every single thing. I think he's 100% right eventually. Okay. That's the only but I have there. I think almost everything he says, I agree with. But what I've learned in 30 years is that I don't. So the funny thing is, I'm telling you about timing the market, but I'm telling you I'm not timing the market because I'm letting the market time me.
Yeah.
Does that make sense? This is Charlie Munger's inversion, right?
No,
is like, so we're going to have a bear market at some point, but I'm going to know because the stocks are going to tell me. as opposed to me telling the stocks guy, I don't sit around going to the economy and the stock market. You're going to a bear market. Enrique Abeyta said so. I don't know. But the stocks will tell me when we're going to a bear market. We showed you in 2022 what happened. We went back to the global financial crisis, all that. It's important as it happens and metastasizes that you understand Jim's stuff, because you're going to understand that'll help you actually identify the opportunities and the specific risks to the bear market. But the bear market doesn't happen until the bear market happens.
Yeah, you're right. And I've tried that too. I've tried talking to stocks and the market, and they've never listened to me. So
yeah, exactly. I can barely get my kids to listen to me. Come on, the stock market, that ain't gonna happen.
But thanks for tuning in today, you guys. Believe it or not, this is the first full week of trading in 2025, and we're gonna get rolling here. Lots of exciting things happening in this bull market that just happens to be correcting at the moment. So stay tuned. A lot of good stuff to come. Thanks, you guys, for tuning in. Have a good one.
Take care, Greg. Thanks, everyone.